Hello and welcome to the Riyal Deal, coming to you from the Arabiya English studios. This is your weekly bulletin, bringing you all the latest business news headlines and analysis from Saudi Arabia. Coming up, the Saudi Central Bank cuts its repo rate by 25 basis points to 4.75% following the Federal Reserve's quarter-point rate reduction. We ask, what does this Fed decision mean for the kingdom's economy? And as Saudi Arabia's renewable energy market continues to undergo major transformation, we'll be speaking to the regional VP of ENGIE. We'll be asking him what role the French energy giant is playing in that transition. And Saudi Arabia and Pakistan sign a defense pact, pledging that an attack on either nation would be considered an attack on both. We'll find out more from a Pakistani government spokesperson who accompanied the Prime Minister on that visit to Riyadh. Plus, Riyadh hosts the Money 2020 Middle East Conference, billed as one of the world's most important fintech gatherings. We'll have more for you on that. Straight to our top story, the decision by the US Federal Reserve to cut interest rates for the first time this year. Well, this cut was a cut to the tune of 25 basis points. The immediate impact of a Fed cut is lower borrowing costs across the public and private sectors and potentially a softer dollar, which can be associated with Fed easing, something that could support oil prices. Well, the Saudi Riyal is, of course, pegged to the US dollar, and the Saudi Central Bank has announced a cut to its repurchase agreement rate by a corresponding quarter of a percentage point. Well, let's find out more now about the possible impact of this Fed decision on the Saudi economy. I'm here in the studio with Jameel Ahmed, who is a global markets commentator and chief analyst at GTC. Thank you very much indeed for joining us, Jameel. Not the first time we've spoken. Great to have you back. So we've seen the US Central Bank finally making that decision after a lot of pressure, a lot of speculation, and calls from the Trump administration as well to cut interest rates. What's taken them so long to do this, do you think? And what impact is this going to have on Saudi Arabia?
Let's start with Saudi Arabia first. If we're looking at the 2030 strategic vision, obviously now we're in the final 5 years of that path. Low interest rates are beneficial for investment. We have so many companies and international expatriates and so forth who are relocating to Riyadh and Saudi Arabia, so lower interest rates are a benefit there. We also have the Saudi stock market. As emerging markets and the Saudi Arabian economy and market is opening up, we're seeing tremendous increases in sentiment for the Tadawul and the Saudi Arabian stock market as a whole. That trend's likely to continue now that the US Central Bank has indicated that it will continue to lower interest rates over the upcoming period. In terms of why the central bank waited so long in 2025, we have to remember they were very active in 2024 with multiple interest rate cuts. But actually, it comes down to the Trump administration and the tariff uncertainty. The Fed were always on course to lower interest rates this year. But what's actually put a pause on that button is the tariff uncertainty, which of course we had those tariffs that were introduced in April in terms of what the tariff rates would be. But we had so many renegotiations, changing deadlines, and actually the line in the sand in terms of the final figures on what those tariff rates will be didn't come out and be official until August. So the Fed were waiting to see what impact it would have on the US economy, the uncertainty that this would bring on for businesses, and basically the US Central Bank were none of the wiser in terms of knowing what the Trump administration would agree on, like everybody else, all businesses, industries, economies, and so forth. That's essentially why they waited, but it's put some pressure on the central bank. A lot of expectations now that maybe they've moved too late because you've got some softening with US economic data. You've also got some weakness when it comes to US economic industries and so forth. But at the same time, there was nothing the Fed could do but wait to see what the impact would be.
OK, so we've had a weaker US dollar, I think it's fair to say, throughout the course of 2025. And I'm just wondering to myself, and listening to what you're saying there, does that, do you think, bring opportunities to Saudi Arabia?
It does. If you look at the hub now of Saudi Arabia, international events, expos and so forth that are taking place, if you're an international traveller going into Saudi Arabia, you're having tremendous discounts. For example, the euro has strengthened by around 10% and above against the US dollar this year. This means if you're traveling from Europe now to Saudi Arabia, you're basically getting a discount on your visit. At the same time, if you're looking at it from our perspectives of those who actually reside in the Middle East and the GCC, Clearly, we're not able to send as much money back home as perhaps we were used to, but there's an opportunity here to help the domestic economy grow. If you're looking at the non-GDP government revenues have increased by around they're up 49% above a year ago, where it was 40%. Actually, non-GDP revenues over the second quarter grew by 6.6% on an annualized basis. And with the upcoming Saudi national holiday that's taking place, opportunities for retail sales, consumer spending and so forth, there's opportunities for the likes of us who are expatriates now to help the GCC economies and the Saudi economy grow as well.
Okay, so if supposing the Saudi Riyal continues to weaken, and the probability that the dollar is going to continue that trend of weakening as well, what other benefits could we see that translate into for the Saudi economy?
Well, let's look at what's taking place now already. You have an international businesses setting up headquarters, setting up hubs, and continuing to employ in Saudi Arabia. Now that the Saudi currency with the US dollar is in line to continue to weaken, there's more opportunities there through the lower interest rates to continue investing in the local economy, continue to grow international hubs and so forth out of Riyadh. That's a trend that I think is already starting to take place and is more likely than not going to continue, because if you look at the US Central Bank expectations now, we're expecting multiple more interest rate cuts in light with the sudden weakness in US economic data, mainly on the jobs front. But as we know, jobs and consumer spending are such a key element of the US economy. It's the biggest contributor to consumer spending of the GDP. So with that likely to weaken, that means there'll be more focus on lower interest rates, which brings more opportunities to Saudi Arabia because those interest rates will also get lower. And that's more incentive for international businesses to continue investing in the region.
Okay, and obviously the world is deeply interconnected. Just talk us through some of the themes that Saudi investors should watch out for during the remainder of 2025 and what this could all mean for the Saudi economy.
Well, we've already mentioned the interest rate expectations. That's going to remain an ongoing theme. What we're looking out for now, though, is we mentioned the uncertainty that the tariffs have brought to the world economy. Now that we actually have those tariff rates being finalized and some key negotiations are taking place with certain economies, we're going to start to see how this is impacting economic data. Because at the moment, all we've had over the past 6 months is uncertainty. Naturally, for the world economy, uncertainty is never a benefit. However, now that we have those tariff rates that are being finalized, and some are actually being finalized at much lower tariff levels than what was threatened in early April, this means the economic sentiment should start to improve in light with continuity. And this is something I think will also bring opportunities to the GCC and the Saudi economy, because you've already got so many businesses that are setting up hubs here. That's going to continue, but if we have a more stable global economic environment, naturally this brings more stability to the economic sentiment in the region as well.
Okay, time for you to get your crystal ball out and give us an outlook for the rest of the year 2025, and in turn, how you think whatever you're going to tell us will impact the Saudi economy.
Essentially, what we're looking for now is more continuity, because 2025 has been very much up in the air, and it's been like watching a TV drama and so forth, seeing so many plot twists, we're seeing so many narratives change. Now we're going to start to get more of a steady ship. This steady ship is therefore going to be more about promoting economic continuity for everybody. But for the region too, this is going to be a benefit, because businesses can now begin to, I would say, anticipate what 2026 and the final 5 years of the 2020s are going to bring. Of course, this naturally fits in with the 2030 vision, where there's a lot of ambitions, but those ambitions are going to be, I would say, more in line to be met with global economic sentiment being more stable.
Okay, and just lastly, I wanted to ask you about gold, because it's had a pretty eventful year, hasn't it? I mean, up about 40% since the start of the year. I think 1 ounce is now at about $3,600. Do you expect the frenzy to continue?
Yes, I do. And actually, if you look over the past 5 years, gold is close to double in value. Of course, the past 1 year has brought tremendous opportunities in gold, but now we're hitting more all-time highs after all-time highs. We've got so many records here that I think we're losing count of how many milestones being met. Essentially, if you look at a couple of different factors here, you have central bank expectations are going to continue to get weaker for interest rates. Naturally, this has historically benefited sentiment towards gold. Also, if you're looking at specifically at the Fed and that pressure that they're under to cut interest rates, there's doubt now that the Fed moved too late, because you're already seeing economic data weaken, although that's not the Fed's problem because of the tariff uncertainty. Nonetheless, as you're getting the Trump administration starting to nominate more and more members into the Federal Reserve Committee as voting members too, there's going to be more public pressure on lower interest rates, which means a weaker US dollar sentiment. It means a more beneficial sentiment for emerging markets and so forth. But also this benefits gold. So I think that, yes, we haven't hit the end of I would say the light's still at the end of the tunnel in terms of seeing more historic highs ahead.
Okay, well, thank you very much indeed for sharing that with us. Always a pleasure talking to you. Jameel Ahmed, Global Markets Commentator and Chief Analyst at GTC. Thank you very much indeed.
Thank you.
In an exclusive interview here on Arabiya English, we'll be getting the latest on a defence pact signed between Saudi Arabia and Pakistan. Any attack on either nation will be considered an attack on both. Well, this strategic mutual defence agreement was signed during a visit to the kingdom by the Pakistani Prime Minister Shehbaz Sharif, who held talks with Crown Prince Mohammed bin Salman. Well, I'll be speaking to Musadik Malik, who is a Pakistani government spokesperson, for all the details on that deal. Saudi Arabia and Pakistan have signed a defence pact pledging that any attack on either nation will be considered an attack on both. Well, this strategic mutual defence agreement was signed during a visit to the kingdom by the Pakistani Prime Minister Shehbaz Sharif, who held talks with Crown Prince Mohammed bin Salman at the Al Yamama Palace. Well, in a statement, the visiting Pakistani Prime Minister thanked the Crown Prince for his, quote, keen interest in expanding Saudi investments, trade and business ties. Well, accompanying the Pakistani Prime Minister on that visit to Riyadh was Musadik Malik, who is a Pakistani government spokesperson who joins us now. Thank you very much indeed for taking the time to speak to us.
My pleasure.
Now, Pakistan and Saudi Arabia have a strong and historic relationship. Military ties between the two countries go back decades. Why is this deal so significant in your opinion?
I think it's the relationship that you're referring to, which goes back since the creation of Pakistan. And frankly, if you look at the roots of this relationship, they go back 1,400, 1,500 years. So the brotherhood that had historically, I think, has manifested itself in various forms. At every juncture when Pakistan has needed support, the kingdom has been by the Pakistani side. Whether it was economic development or defense-related matters or diplomacy, the kingdom was already there and always there. And same goes for Pakistan. If you walk down the streets of Pakistan, you would find out that even a common man would say that we are going to be there by the side of our Saudi brethren if the two holy mosques are ever attacked. And it needed no treaty. Every Pakistani would tell you the same. So I think what was implicit before and unstated has taken the form of a treaty. And that's the most significant part of this treaty, that it's now kind of a relationship which is documented. But this relationship has been there forever.
OK, so let's talk about what's been agreed on. An attack on one nation means an attack on both. And I want to ask you, what message does that send out to the world?
I think it sends out the message of brotherhood, and it sends out the same message that the North Atlantic Treaty gave to the world, that this is not offensive, this is not aggressive, this is not against anyone, this is a defensive treaty where countries who have cultural ties, who have religious ties, who have all kinds of relationships, economic relationships, other relationships, they come together and they're going to exchange technology, they're going to exchange training, they're going to share innovations, and they're going to have joint military exercises to make sure that the experiences that we've had over the past several decades being extremely better, battle hard, and has, we share them and become a formidable force.
OK, just talk us through some of the details of the deal. What concretely does it provide for?
I mean, it's kind of like many other defensive. I think the best way of looking at it is to look at NATO. It's not an aggressive treaty. It doesn't fight for attacking anyone. But if any of the countries in NATO framework are attacked, it would be deemed as if all of them have been attacked. So we've had this relationship or tacit understanding for several decades, or frankly forever. It's just that we've now articulated it in the form of a treaty.
Okay, and do you think this deal is going to make the region safer? And as an extension of that question, do you think the deal could be extended to other countries in the Gulf?
I think very good relationships, very deep relationships with other countries. But the kind of relationship that we have with the Kingdom of Saudi Arabia is unprecedented. So I'm not terribly sure how our relationship with other countries would pan out. But if there was a larger work, and I'm not committing to anything, but I would like to believe that if there was a larger framework which created more stability and more peace, Pakistan is always open to discuss that lead to peace and stability. So we would take into account anything that comes our way, but only in the way of something that creates peace and stability in the region and doesn't create any, we don't want to be part of anything that destabilizes the region.
Okay, and of course you've just come back from Riyadh, and I saw all the flags there welcoming the Pakistani delegation to the Saudi capital in the last few days, as well as strengthening defence cooperation with the kingdom. Just tell us what else was agreed during that state visit.
I think this round was exclusively about our defence agreement. And we spoke about a lot of different elements of that, including, as I mentioned to you earlier, exercises, technologies, and sharing, intelligence sharing, technology sharing, and so on and so forth. So this visit was primarily focused on that.
Okay, well, thank you very much indeed. We really appreciate you taking the time to speak to us. Musadik Malik, Pakistani government spokesperson, thank you very much for your time, sir. Well, you can see that exclusive interview in full on our Saudi business show, The Riyal Deal, which airs as ever on Monday. Let's get a quick check of some of the other top stories from the week. Saudi Arabia and New Zealand have signed deals valued at some $100 million. This was announced as Wellington's Trade Minister Todd McClay visited Riyadh. Well, McClay brought with him a large delegation aimed at promoting trade and investment ties with the kingdom. Foxconn's Saudi joint venture FIT has announced plans to build its first manufacturing base in the Middle East. This new base in Saudi Arabia, which will make electric vehicle chargers, is expected to begin production in 2026. And this supports the kingdom's target of having 30% of cars electric by the year 2030. And the Chinese tech giant Tencent has announced that it is stepping up its investments in Saudi Arabia. The internet and tech giant says it's in the final stages of launching a new data center in Riyadh, adding that Saudi Arabia is the company's gateway to the Middle East. While Tencent's cloud projects align with the kingdom's digital transformation agenda, which is central to Vision 2030. Now, in line with and fueled by Vision 2030, the renewable energy market in Saudi Arabia is undergoing major transformation. Well, renewables generated some 2 gigawatts of energy during the year 2024. And within the next decade, that figure could be closer to 40 gigawatts. Well, on this programme, we've spoken to the CEO of one of the key players in this segment, that is Marco Arcelli, the CEO of Aqua Power. But there are other international and regional companies operating in the renewable energy market in Saudi Arabia, amongst them Alphanar Group, EDF Renewables, Masdar, and the French energy giant ENGIE. Well, speaking of ENGIE, we're joined now by Turki Alshehri, who is ENGIE's regional vice president for the GCC region. Thank you very much indeed for taking the time to speak to us.
Thank you. It's a pleasure joining you, and thank you for providing us this opportunity.
Now, ENGIE has had a presence in the region for more than 30 years. Just talk us through, what are your main activities and your main projects underway in this region?
Our projects in the region was mainly based on thermal plants. When you look back 20, 30 years ago, we were one of the first developers in the IPP business, which is the public-private partnerships. So also quite a pioneer in that area. Moving forward, and as a result of the changes with respect to decarbonization happening in the region, with the targets being put in place, we're now also highly focused on renewables, battery storage, carbon storage. We do also a lot on desalination. That's been a legacy projects. However, it's changing now, mainly with the use of RO, the use of integrated solar sites as well. And really, we're just shifting or transitioning to becoming a utility, best-in-class utility when it comes to decarbonization. So I would say that we not only just continue our legacy assets, but also introducing new technologies that help support the region in achieving their carbonization objectives and targets.
Thank you very much indeed for that. I mean, clearly, lots on the ENGIE radar. Now, I wanted to ask you, I mean, you're a Saudi national, and you are, of course, responsible for a region which is described by ENGIE as being a priority region. Why do you think it's such a priority?
I think it's a priority region considering all the changes that are taking place in terms of infrastructure projects, not just on the energy sector, but also on the plans and initiatives they want to forgo in terms of global presence, in terms of foreign direct investments. So this enormous change obviously impacts our scope with respect to energy because they're becoming far more welcoming with respect to regulations, with respect to how we operate, with respect to localization, industrialization, and this pretty much helps accelerate the activities that we're undergoing. You know, if you look back 10, 15, 20 years ago, the focus was really mainly on EPC types of contracts, right? So the idea is you bring in EPC players to build your facility, to build your infrastructure. 2-3 years, they're gone, and you operate it. That was the majority of projects. But I think moving forward, what we're seeing and continue to see, and I believe will be the direction moving forward, is no, let's bring in foreign direct investments. Let's bring in that technology, that know-how, and have that long-term partnership. Not just the 3 years where they build it and then leave, but rather come in, continue, grow, integrate, and really create a long-term international presence of foreign investments in the region. So I think it's a big change that has helped us not just accelerate our activities, but really integrate many other technologies, know-how, innovate, work on long-term opportunities, as opposed to where in the past they were far more shorter term.
Now, before we go into any of the specifics of some of the areas you've discussed, like battery storage and desalination, let's look at the broader picture. We are obviously a show focused on Saudi Arabia, and I want to ask you, what are your goals and priorities here in Saudi Arabia?
So for Saudi Arabia, I think what's also fascinating, and I would say maybe the initial start was the 2016 vision, the 2030 vision that was put out in 2016. That focused again on the Triple-P projects and the decarbonization targets. And as a result of that, I would say the major shift was in renewables, in solar, in wind, and you see that progressing as the years come. Initially, it was solar projects, wind projects. Now they're moving towards battery storage. Now they're moving towards H2. We're now beginning discussions on carbon storage as well. We're looking into how to look at the value of valorizing the brine that comes from desalination projects, integrating desalination with solar. So it's really quite a big change and an aggressive growth when it comes to meeting the targets that they have put in place in the vision for Saudi Arabia. And I think it aligns perfectly with ENGIE's objectives. Wanting as ENGIE, wanting to become the #1 utility when it comes to the transition of decarbonization, and aligning with Saudi's 2060 targets for net zero I think is a good alignment with respect to achieving not just our objectives, but also ensuring that we achieve the country's objectives. So from that perspective, I would say the growth continues to be on desalination, cleaner desalination, using reverse osmosis and solar integration, as well as continuing to grow in renewables, continuing to grow in battery storage, and looking at the long-term outlook of how to actually valorize all of this with the industry as well. So the growth, I believe, will continue to happen. It's pretty much exponential growth as we see taking place. You're seeing far more players coming into the game, and I think this is what we can expect to see for the years to come.
Okay, and obviously, Mr. Alshehri, the geopolitical situation across the globe changing pretty fast, isn't it? And I'm just wondering whether the return of a second Trump presidency has changed anything, in particular for renewables, and as far as ENGIE is concerned. What do you think?
I think I wouldn't say it changed anything for ENGIE, because ENGIE has continued to consider the region and Saudi Arabia in specific to be a core country for growth. I do see changes for other companies as well, because I think it also shows the importance of diversifying where you grow for these international developers. And it's not to say that there's a perfect country out there where every country and every region has their own challenges. The U.S. is obviously going through their current challenges, and I would say maybe the biggest understanding of that is the importance to diversify. It doesn't put or give away anything in terms of the growth. The U.S. is still obviously growing at crazy rates, right? 60 gigawatts a year of renewables. But I think with the current policies in place, it does show that companies that have diversified their portfolio are obviously in a much stronger position. So for ENGIE, no change. We continue to value the growth and the relationship in Saudi, and that has always been and will continue to be.
Okay, and Mr. Alshehri, I mean, ENGIE has clearly signed some pretty big deals during the last few years. Some of the big infrastructure projects in Saudi Arabia are very much projects you're involved with. The ones that spring to mind are Riyadh Airport, NEOM, the PIF hydrogen project. Have you got any updates on any of those deals for us?
So with respect to the energy efficiency projects, we're still working, every year it's roughly 3-4 projects that we're working on in the public sector when it comes to energy efficiency. When it comes to carbon storage, obviously it's still being discussed in the country, and we're supporting it from our international experience in that area, because we also have gas storage facilities across Europe. So we're able to work with the country, not just to what is related to our scope of work, which is the thermal assets, but rather how our understanding of where to best store CO2, what networks to use, what the economics look like. So we actually go above and beyond our scope of building projects, and we work with the Ministry of Energy, we work with Aramco on that long-term outlook. So with respect to that, I would say there's nothing as of today in terms of specific infrastructure that we're investing in. It's more of preparing the ecosystem, aligning on the studies and discussing what is the best way to pursue such projects.
Okay. And obviously, I mean, water security, a key issue right across the region. And you've talked a bit about desalination and what ENGIE brings to the table in that respect. It was reported earlier on in the year that ENGIE had divested from desalination projects in Kuwait and Bahrain. And I was just wondering why you're here, if you could tell us what the rationale for that was.
So when it comes to certain divestments we make, I think it's common amongst many companies, right? Because you try to regenerate capital, in addition to identifying areas where you can decarbonize and meet your decarbonization targets. So some of these assets that we divested was solely for the purpose to obviously ensure that the portfolio that we have meets our 2040 targets of net zero in scope 1, 2, 3. And some of these assets are obviously outdated, and as a result would not support our projections of meeting that net zero target. So I think that that's something that's common. It does not change at all our interest in the region and our growth, but clearly sends the signal that the growth of ENGIE would be focused towards decarbonization objectives. So we do not, I know that, for example, in many countries around the world, there's still a lot of push on keeping coal assets, extending certain older gas plants because of security of supply. However, for ENGIE, our target is purely to ensure that no, we continue the objective of decarbonization, and our involvement would be towards that objectives, not to remain in legacy issues that are high carbon emitters, but rather work on developing new assets. And in some cases today, the older assets we have, if we do not see, ideally we would like to decarbonize the assets. So some assets we have today in Saudi Arabia, we're working with the authorities to make them more efficient, to add newer technologies that help us ensure that we're achieving that target. And in some cases where we would need to divest, we would divest obviously in a strategic fashion to ensure that there's no impact whatsoever on the availability or reliability or security of supply of energy to those specific countries.
Okay, now AI and data centers are a big focus across the globe. Saudi Arabia really embracing AI with the launch of companies like Humane. And I'm just wondering where you see ENGIE fitting in with those ambitions.
So with this respect, we're already very involved and have been involved. It's obviously going at a much faster rate with AI, but with respect to data centers, we've always been engaged in the design of data centers, in co-location with respect to data centers, providing 24/7 energy. And this was happening globally. Obviously, now it's accelerating at enormous rates. Every country, including obviously the region, is focusing on building data centers, becoming a global hub. Saudi Arabia obviously taking lead. And I think Saudi Arabia has a huge advantage when it comes to low cost renewable energy. And to give you an example, if you look at Microsoft, for example, Microsoft had always been able to achieve 24/7 renewable energy since 2015, right? So nearly a decade ago. But how did they achieve that? They achieved that through carbon credits, right? So they would buy carbon credits or green credits and then be able to outset their conventional energy use. SBTI accepts that, right? But moving forward, that's not going to last. What happens is they start to say, no, you can't simply offset your conventional energy. You would actually need to use clean energy. And I think that's what these GAFMs, right, the Googles, Microsofts, and so forth are moving towards, is okay, yes, you can claim 24/7 clean energy, but reality is it's not, you're just offsetting it with credits. And now they're really, and through ENGIE support on a global scale, we're building 24-hour clean energy. Saudi Arabia has a huge advantage with respect to that because you have lots of land, lots of space, and very competitive prices. So I think when it comes to data centers, I think that Saudi will be a big player with respect to being able to provide that type of energy. Clearly, ENGIE being in the game for decades with data centers will be able to provide significant support to these data centers as we start to see them grow in the country.
So in terms of your list of priorities, just how far up the list has AI and have data centers gone? I mean, is there a percentage figure you could perhaps give us in terms of what they represent?
I mean, it's hard to quantify it, but I would say, it's quite a large percentage because when it comes to the energy that we provide, we're starting to see a lot of that data center demand is growing quite big and very, very fast. And there's a big need for it. And as a result, much of our energy that we are selling is going to data centers, right? So I can't give you an exact figure, but I can tell you that percentage has, if I would say on an annual basis, is easily doubling year on year, easily doubling. and I'm talking about on a global scale, right? And we expect to see that it's slowly starting to grow in the region, but I would see no difference in what we're seeing globally as well, that will start to become an enormous energy need that would have energy companies involved in and ensuring that their portfolio is supporting those data centers as they grow.
Okay, let's talk a bit about people. And I wanted to ask you whether you'd had any challenges when it comes to finding the right people for some of what sound like extremely specialized roles. Are you tending to recruit locally, specifically in Saudi Arabia, or are you having to import your talent?
So for Saudi, I think we're doing very good when it comes to local content. In some of our assets, the local content is 90%, 80%. Our overall outlook of in Saudi, in specific with respect to HR or human resources, is we're 60% locals. Talent is definitely a challenge, specifically in this region, because the projects, every year you have new projects. Every year there are several projects taking place in the country and the region. And obviously you have to source that type of talent. And it's quite unique talent. You know, if you're talking about project managers, you're talking about technical individuals in renewables, different technology, business development, finance, M&As. So I think it's an enormous pool of different types of talent with respect to the energy infrastructure that's required. And with the addition of all these new facilities coming on year, it's quite challenging. So I think as an international developer, you really have to differentiate yourself from others as to why an individual would want to come work for you instead of the next developer in place. But the talent is always required. There's always a need, and it's usually talent that has expertise in the areas I mentioned, whether it's project management, whether it's renewable technical experts, solar, wind, battery storage, carbon storage, financial experts in those fields. But the talent need is continuously growing, and it is challenging. So we do rely on obviously local talent, but we also look at international expertise to bring in as well.
And just lastly, I mean, clearly, as we look forward, the clock's ticking towards Vision 2030's due date, which is less than 5 years away from now. Where do you see ENGIE in the region in 4 or 5 years from now?
I mean, I think, you know, we've been growing quite big in the past 3-4 years. We nearly doubled our investments in the region, and I continue to see that growth. I think what we'll end up seeing is obviously a lot of regulations, policies improving towards facilitating more for developers such as ENGIE to work in the area more effectively, more efficiently. And I do see a lot of progress with respect to battery storage, that becoming a need, because they have been building renewables for quite some time now, nearly 10 years, and that portfolio of high renewables in the power system will need battery storage to accommodate. I do see that even though there's a little global delays with respect to decarbonization, but still the infrastructure required to meet decarbonization targets needs to start now, and they've started, they're working on it. So I do think that we'll also start to see carbon capture in thermal plants. I think we'll start to see a lot of older assets being decommissioned and the newer assets taking place. That's already happening today, but I think that will happen far more faster. You'll start to see as well a lot of simple cycle gas turbines, which are happening now to, again, compensate for the high penetration of renewables and to make sure you have a flexible system. So I think the system will start to become far more complex, more dynamic, but with the growth that's happening in the region in terms of other infrastructure, in terms of other projects taking place, that demand, if you look at Saudi alone, the demand increased by 8%. 8%, that's huge. That's a huge demand. So needing to meet that demand with renewables and with conventional power will require a lot of technologies. So I think that's where the country will go. A more diversified portfolio with a lot of battery storage being put in place.
Okay, well, we really appreciate that. We're going to have to leave it there. Thank you very much indeed for taking the time to talk to us. Turki Alshehri, the Regional Vice President for the GCC region at ENGIE. Thank you, sir.
Thank you, Tom. Thank you very much. Have a wonderful day.
Okay, let's have a look at some of the other stories we're keeping an eye on for you here. The Saudi energy company Aramco has finalized a $3 billion international Sukuk offering, which was split into two tranches. The securities are now listed on the London Stock Exchange. Well, analysts say this highlights global investor confidence, and it also reinforces the kingdom's standing in its international Islamic finance. The Global Infrastructure Forum and Expo 2025 has wrapped up in Riyadh. The three-day event, which seeks to enhance efficiency in urban planning and implementation, brought together senior officials, experts and industry professionals from more than 25 countries and was attended by some 26,000 people. And for the first time in the event's history, WrestleMania is set to be hosted by Saudi Arabia in 2027. The 4-decade-old event, the biggest date in the annual wrestling calendar, has never been held outside of North America. Well, the chairman of Saudi Arabia's General Entertainment Authority, Turki Alshehri, has announced this news, calling it historic and saying it will be part of the kingdom's flagship Riyadh season, which is an annual festival of sports and entertainment events. And finally, last week, Saudi Arabia hosted the Money 2020 Middle East Conference. Well, that event, which is regarded as being one of the most important events for fintech, brought together some 450 global and regional brands, as well as investors from more than 40 countries. Well, under discussion there in Riyadh, amongst other topics, the future of the financial sector, AI, and open banking. Well, that event galvanizes Riyadh's position as a regional hub for business and financial innovation, very much in line with the goals of Vision 2030. And that is all we have time for today. Thank you very much indeed for watching The Riyal Deal here on Arabiya English. Look forward to seeing you again next week. Until then, bye-bye.